Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from Mainnet 2023 in New York City. Joining me for this segment, we have Colin Butler, Global Head of Institutional Capital at Polygon Labs, to discuss tokenization and how Polygon is attracting institutional, traditional finance money. It is great to have you with us, Colin. Welcome to TradeTalks.
Thanks, Jill. It's great to be on the show.
So let's talk about that some more. Why is TradFi getting interested in the tokenization process, and what is Polygon doing to help facilitate that?
Yeah, absolutely. So I think of it as a solution that's an order of magnitude better than the prior solution, which is why you're seeing adoption. I think of it as more of a utility and a technology, and it's really an infrastructure that people are building on to save costs, increase revenue, and de-risk their organization. And this is very central to what traditional finance is looking to do, because what they need is margin expansion, so they need lower costs, they need higher revenues, and it's a heavily competitive environment. So blockchain offers them a chance, really for the first time in a long time, to get a significant leg up on their competitors if it's used properly. I know that's a lot to unpack. Well,
we're going to talk some more about that. So what are some of the major factors that are in play for blockchains that are competing for these trillions of dollars of institutional money?
I think one of the major factors is really settlement. So it's the rewiring of the global financial system, again at the infrastructure level. So it's not something that a lot of people are going to really hear about. I think it's a shift that's going to occur largely behind the scenes, and it's occurring now at a lot of the major institutions. But really what it allows them to do is to save a lot of costs on their transfers of assets from one place to another. A lot of these systems are very kludgy, they're very creaky, they're built over decades, and they need to be rewired into something that creates a essentially one-stop shop instead of multiple avenues where they have to say, okay, asset comes here to here to here, and blockchain offers a solution whereby it's really more like one or two as opposed to 8 to 20 different ledgers that you have to keep in order to do the same thing.
Right, well, it kind of makes sense though. On the consumer side of it, they shouldn't really have to know what's happening behind the scenes. It should be seamless. You should be able to get your money quicker or complete transactions in something that's a little bit more reasonable than the way we know it today. Let's talk about Franklin Templeton. They actually just in the US registered their first mutual fund that transacts on a public blockchain. Tell us more about that.
Yeah, so absolutely. Franklin Templeton announced recently that they were building on Polygon. They actually put their money market fund called Benji on Polygon for the first time. So really I think what that does is it creates a scenario where you have yield on chain, and the ultimate goal for something like that is you wouldn't have to off-ramp. So it kind of keeps everything in the crypto ecosystem, and for them, longer term, it's a way that they can save costs on their product, and ultimately I think the longer term idea is to pass those costs along to consumers. So if you're thinking about it from the customer perspective, eventually what you get is a lower cost product and potentially more uses for that product down the road as regulation shifts and more of the ideal world blockchain use cases come online.
Yeah, which is interesting because, I mean, the classic thing is here, ETFs are so much less expensive than they are for mutual funds, so if you can bring that cost down, kind of makes it more attractive again. Specifically for Polygon, what are some new interesting projects that you're working on?
So a lot of it are things that we can't talk about,
right,
but there's a lot of big institutions coming into this space because they also see the ultimate idea of having a user hold an illiquid asset and being able to borrow against that asset and have 24/7 liquidity. So there's a lot of reasons why the customer will want this, and there's also a lot of reasons why the product supplier will want it, and that's why it's happening, sort of irrespective of kind of the regulatory picture. There's just fundamental drivers for why the shift is occurring, and that's why you're going to see kind of more and more of these announcements come online over the coming months and years.
Well, and that's exactly my last question to you. Realistically, when do you think we'll start to see these products based on blockchain really become a mainstream thing?
My view is that I don't think you're going to have to wait long. I think there's a lot of conjecture around it, but I think you're going to see a lot of visibility in the next 3 to 6 months.
All right, so it's happening now.
It's happening now.
That's awesome.
Yeah.
We appreciate the insight, Colin. Thanks for joining us on TradeTalks. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.